What's up, everybody? Thanks for tuning in. In this video, I'm going to be sharing with you guys the exact trading strategy I used to pass my 100K Hola Prime Phase 1 account. As you all know, and for those that don't know, for those that are seeing this channel for the very first time, I purchased a 100K Hola Prime prop firm challenge account, and I have successfully passed the phase 1. Currently, I am trading the phase 2. So I have decided to make this video to show you examples of the nature of trades, the nature of setups that helped me pass these phase 1 accounts. This is basically a swing trading model. It is completely hands-free. It is very suitable for students that go to school on almost on a daily basis, and it is also suitable for workers that have daily jobs, workers that have to go to work on a daily basis. People that don't have time to be glued to their screens for hours on end, monitoring their charts. I would say this swing trading model is really, really suitable for these kinds of people. So let's go into my computer. Let me show you examples of these trades. Boom. What's up, y'all? Welcome to my screen. This is a chart of AUD CHF on the 4-hour time frame, as you can see. So for this strategy, the first thing we're going to do is to go on the weekly time frame. We don't have any business with the monthly time frame, but I just prefer to go on the weekly time frame. That is the highest I like to go. So going on the weekly time frame, you would realize that recently the market has been bullish. Let's use the path tool to depict the bullishness of this market. As you can see, lower high, higher low, higher 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 high. So this is what we call an uptrend. For those that have some experience in the market, know that this is what an uptrend typically looks like. For downtrend is typically like this. Lower high, lower low, lower high, lower low, right? So uptrend is higher high, higher low. Downtrend is lower low, lower high, lower low, lower high. I think, if I'm not mistaken. So in a nutshell, this particular pair AUD-CHF is in an uptrend on the weekly time frame. So I just jump back to the H4, to the 4-hour time frame. I have a particular example of this trade somewhere. A typical example I want to show you guys. And trading is all about repeatability. If you have a particular model you trade, you just need to be able to find everywhere on the charts, on any currency pair, where you have that particular model repeating itself. As long as that model is repeating itself, you can trade it and then allow probability to do its job. So this is a trade that I took a while back, and if you notice, on the 4-hour time frame, the trend is still bullish. You can see the trend is generally going upwards. It is going upwards, going upwards, going upwards. But let's pay attention to this particular part. Paying attention to this particular part, there is what they call liquidity sweep right here around this level. You can see that the chart is moving upwards, and then around this level, if I use the line tool to depict it, you will see that there is liquidity sweep right here. Let me use the black dotted line to depict this liquidity sweep. You can see how this bearish engulfing candle came downwards and swept liquidity before going back upwards. Went back upwards, forming some kind of W pattern. So this is a W pattern right here, and then we have some form of neckline of the W pattern, right? This the neckline, and then you would notice that this candle right here breaks past this high. So this is what we refer to as the break of structure. We use the orange color line to depict this break of structure. You see, there is some form of break of structure right here. Not only do we have a liquidity sweep, price went upwards and broke structure. So what I usually do is to bring my Fibonacci. These are all the tools I use. I use my trend lines and then my Fibonacci. Anytime I get this liquidity sweep, I wait for a break of structure. Then I take my Fibonacci. Since the trend is bullish, so I want to be buying. So I will put my Fibonacci, I will start drawing from swing low and I will take it to swing high, like this. So if you notice on these Fibonacci tools, there are different Fibonacci levels. There is the minus 0.26 level, there is the 0 level, there is the 0.382 level, there is the 0.5 fib level, there is the 0.618 level, and there is my own customized level is 0.684. It can be anything. Some people could change this level. Instead of 0.684, they could make it 0.75. If you make it 0.75, you will get a better risk to reward. Some people could make it 0.71, but I don't like making it. I like using 0.684. I like using 0.684 fib level. The reason why I like using 0.684 fib level is I don't like missing setups. I rather have a lower risk to reward trades and get tagged in most of my setups than me having a higher risk to reward, potential risk to reward entry, and I don't get tagged in many of my setups. I hate it when price gets so close to my entry level, misses it, and then goes straight to take profit. It's so annoying, and that is why I have this customized 0.684 level, which I like to use. I don't see many traders using this. I think for now I'm the only one that I know that is using this level. So what I would have done on this trade is I would have placed my buy tool on the 0.684 fib level, set my buy limit, and then I usually take profits at the 0 fib level for a 1 to 2.17 RR. You see? So this is typically what I do, and this trade would have lasted, let's see, this trade was tagged in on the 27th of January and then hit TP on the 29th. So this trade typically lasted just 2 days. If I wanted to be more ambitious in this setup, I could have extended my TP level to the minus 0.26 fib level for about a 1 to 3 RR. My TP would have been tagged around here like this. But I hate it when sometimes the trade would come, hit my 0 fib, and then come back and take out my stop loss. So in that regards, I just like to leave my TP right here at the 0 fib. So that's just it. This is just my strategy. It's all about my strategy. I'm very okay with a 2.17 RR per trade. very, 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 very okay. And this is so hands-free because it is on the 4-hour time frame. All I need to do is to just set my entry limit. When I finish my analysis, set my entry limit, I'm free for the rest of the day. I can decide to go to school, go study, or go to work, and allow my trades to play out. Literally takes 2 days or more to hit final TP, and you don't have to be on the charts monitoring this setup. Set your limits, set your TP level, set your entry level, and then you are free to go. It's totally hands-free. So this is one example I wanted to show you guys. The next example I would like to show you guys was taken on Eurocard. I think I have a very nice example right here of a trade I took. So repeating the same thing I did on AUDCHF, what I would typically do is to just go on the weekly time frame. As you can see right here, on the weekly time frame, you can see that this chart also is bullish. Eurocard is bullish. You can see from this recent price action right here. Higher high, higher low, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Bullish. This is what we call typical bullish trend. So what I will do next, since I know the weekly time frame is bullish, what I will do next is to come to the 4-hour time frame. Coming down to the 4-hour time frame, there's this setup. I actually took this setup on my Hola Prime phase 1 prop challenge, and it netted me about, I think I let this trade to move directly towards the final 1:3 RR TP level. I didn't close at the 1:2.17. So same thing, we have liquidity sweep right here. As you can see, this candle breaking past this low. Let me represent it with a black dotted line. Yep. Black dotted line. And then we have our W. If it's a downtrend, instead of W, it's going to be an M pattern. So we have our W, and I usually like to use this horizontal bar to represent my neckline of the W, like this. Then right here, I have my structure. Structure here. Use my orange color. I like to use different colors to represent different things on my chart. So you have my structure. Structure is broken right here. Structure is broken right here. So what do I do next? I just bring out my Fibonacci tool and place it from swing high to swing low. Place from swing high to swing low. That's it. So the next thing is to bring my long tool and place my entry on 0.684 fib level. My stop loss will be right there. And then for this trade, I allowed it to roll to my final minus 0.26 fib level for about a 1 to 3 RR. Simple, just like the last example I showed you guys. If you are a student, if you have work, if you have to go to work, all you need to do is to do your analysis in the evening whenever you are back from work. If you have a potential setup, all you need to do is to place limits. You place your entry limit at your entry price, and then put in your stop loss. And then when you get tagged in, the trades would give you, the chart would give you an ample amount of time for you to come back and set your take profit if you like. Because what I like to do is I like to wait after I get triggered. When I'm sure that I'm already in the trade, that is when I come to the chart and then set my final take profit. I decide on where to put my final take profit, and then I allow the chart to do its thing. So for this trade, it took how many days? Let's see. So this trade was tagged in on May 28th, and then it hit final TP on June 4th. So that's about approximately 6 days. It took approximately 6 days for this trade to finally come to fruition, which is okay. I didn't have to be on the charts monitoring these trades by the minute. This trade was typically hands-free. I was free to do whatever I wanted to do during the time I took this trade. So that's one good thing about swing trading. It gives you ample time to come back. If you want to add in, if you want to stack on the trade, if you want to manage the trade, you don't have to be in a haste to manage the trade. You don't have to be at your workplace checking your phone, checking your charts, going to the toilet to go and look at what price is doing in the market. You could just monitor the charts after every 4 hours or after every 8 hours, depending on how free you are. So that is all I have for you guys about my trading strategy. If you like this kind of content, if you want to see more of my trading, if you want to follow my prop firm challenge that I am doing at the moment, please subscribe to my channel, like this video, always like every video I post. If you have an idea for me of a kind of video that you want me to post, please do let me know in the comment section. I read all my comments. I like to read my comments. Yeah, man, that's all I have. I guess I'll see you guys in the next one. Peace.